Well, one of Canada's big banks, RBC, says the December job numbers are a key input for the Bank of Canada's upcoming decision. Let's get more on this from Claire Fan. She's senior economist at RBC. Claire, thanks as always for joining us.
Thanks for having me, Roger.
What are we looking at for the numbers right now?
So headline numbers, we are expecting a 35,000 loss in employment, as well as a tick higher in the Canadian unemployment rate to 6.8%. Now, on the surface, these numbers might indicate a pretty significant softening in the labor market in usual times, but it is the context that really matters, which is, between September and November, what we saw. And what we saw was consecutive strong gains in job market, 180,000 just over those 3 months. So what we're expecting for December, is a partial reversal of those solid sort of trend. And it will really leave the jobs market still quite a bit stronger relative to where it was a quarter ago.
I mean, those were really unexpected, those numbers we saw. Is this just more of a reality check?
Yeah, absolutely. I mean, again, 180,000 job growth that we've seen over the past 3 months between September and November. And if we were to look at where the job growth has been coming from, we've seen a lot of, increase in part-time jobs, increase in younger workers as well, which could indicate that to some extent, maybe the gains have been boosted by challenges with seasonally adjusting the data around holiday hiring periods. But we've also seen fairly strong job growth in healthcare, which is not typically a cyclical segment. But more importantly, I think for us is signs of stabilization in some of the more trade exposed sectors. And these include manufacturing and transportation and warehousing that combined have actually accounted for over 50,000 of the 180,000 gain that we've seen over those months.
So I imagine a stabilization in those sectors will be a good thing right now, considering everything that's been unfolding.
Yeah, absolutely. I mean, towards the end of 2025, I think we were really starting to see really, really good signs. I mean, the job reports apart, hiring demand indicated by job posting data has started to come back. And throughout the year, again, Canadian consumers have been behaving fairly resiliently throughout. Towards the end of last year as well, we ourselves at RBC actually tracks consumer spending. I was seeing a huge surge around sort of the holiday discounting periods, just ahead of the holiday period. And of course, there were idiosyncratic events as well. I don't know if you still remember the Blue Jays postseason runoff as well. So there are a lot of reasons, to expect some cautious optimism for the economic backdrop as we head into 2026.
And I just want to go back to for the expectation for the December numbers. You expect a drop off for part-time and younger people after the nice increases that they've seen. Wouldn't December be one of those months that those would be people that would be finding jobs?
Yeah, absolutely. So that's why we're not expecting a full reversal, but merely a partial reversal. And again, our expectations are relatively softer comparing to market consensus, which are expecting also a job loss, but much smaller, -5 versus 6.7 unemployment rate.
And then heading into the year, any indicators where the unemployment rate might go? There's so much possibly coming up this year, isn't there?
Yeah, well, we are expecting, still broad improvement in the Canadian labor market, and that the unemployment rate will start to gradually tick lower to 6.3% by the end of this year. So that is our expectation, and that is also very much in line with what the Bank of Canada has been, communicating in terms of their expectation for the economy in 2026. Now, they don't forecast the unemployment rate itself as an indicator, but they do see labor market indicators as very important input into their decision. And we know that because in the December meeting, they specifically mentioned, recent improvement in labor markets, but also softer hiring demand going forward. So I think this expectation for a gradual kind of recovery in the jobs market it's very much in line between us as well as the central bank.
All right. And then that segues nicely into what can we expect from the central bank, do you think, for the next for 2026?
Yeah, so I love how you phrase the question, which is not what we expect from them from January, the next meeting, which is not a lot. The question really is, what do we expect from them for this whole year? And I think the key to that question partially is tied to some of the numbers that we will see coming out of this Friday's report, mostly around the risks. So we are expecting a softer report, and the Bank of Canada likewise will likely be holding similar expectations as well. Now, I would say that if this report comes in more solid, if this were to be a fourth consecutive strong job gain, the implications will be much more meaningful for the Bank of Canada, who tends to view this data on a longer term 3-month horizon, because it's telling them the improvement in labor market is indeed coming in a bit faster than they're expecting. And that could risk pulling some of those discussion around rate hikes, which we expect will be in 2027, earlier into 2026. Now, that compares to downside, which are weaker numbers than what we're expecting right now, which could be less meaningful from the Bank of Canada's perspective.
Okay, we'll have to leave it there. Always appreciate talking to you. Claire, thank you for joining us.
Thanks for having me.
That was Claire Fan, senior economist at RBC.